Hi, and welcome to Trade of the Week. This short trade in sterling yen worked despite, or perhaps because of, speculation that the Bank of Japan was close to intervening to sell the yen. Whilst this speculation put off cautious traders like me, more seasoned traders let out a chant of "sell the yen if you think you're hard enough," and carried on buying it. Although I missed this trade, I thought it'd be useful to see how a straightforward mechanical approach would have fared. August had already seen a 600 pip fall in sterling yen when last Friday's price bounced off 132 support to close at 133. The resulting doji candle could have been signalling an end to the downturn. However, Monday opened with news that the Japanese Prime Minister and Governor of the Bank of Japan had discussed the yen but not even talked of intervention. This acted as a red rag to yen bulls, determined to see how far they could push the market to provoke a response. Early trade produced a bearish engulfing candle, which I treated as an amber alert. In this example, I'm going to use a simple moving average strategy on a 30-minute chart. The trigger here is a closing candle below the 21 period moving average, confirmed by an RSI reading below 50. In this case, it would have produced a trade at 10:30, selling £4 at 132.62. I'd have placed my stop loss at 133.30, just above the high point of the 7:30 candle. Using a wider than usual stop loss, I'd have had to reduce my bet size to just £4, giving an overall risk of £272. Setting a profit target, I'd normally close part of the trade at 132. This was a level that had acted as good support in the past. But as this hindsight trade is for my education as well, I'm going to use a moving average crossover to close the whole trade. That's to say, I'll close the trade if the candle closes above the 21 period moving average. So how did the trade pan out? The price moved lower throughout the day, closing just below 132. The trade did come under threat around 7 o'clock that evening, when the price moved above the red line, but it dropped back to close bang on it. The price then fell a further 50 pips into the close. The yen strengthened throughout Tuesday morning, touching a low point of 128.76 around lunchtime. It would have been easy to claim that I closed the trade there, especially with an RSI of 19 and the price 30 pips below the lower Bollinger Band. But this is about honestly applying a mechanical approach, so it's no deal. Equally, the large engulfing candle at 3 o'clock would have sent out warning bells. But sticking with the plan, I would have closed out this bet at 130.20 after the candle closed above the line. So this trade would have produced 242 pips on a £4 bet, giving a profit of £968. Now granted, this method missed well over 100 pips from the bottom, but personally I'd settle for a trade like this every week. Have a good weekend.